What's up, guys, and thanks for tuning back into Token Metrics TV. This is Crypto Foresights. I'm your host, Forrest Pribish, Director of Research here at Token Metrics, and in this video, we're taking a look at the overall market, right? We're trying to make some reasonable analytical predictions about what the market may do and prepare ourselves to benefit regardless of what happens and maximize the benefit that we can see in our portfolio by understanding the market. So the first thing I actually want to go over is total cryptocurrency market cap. And you can see total cryptocurrency market cap right now. And that just, if you're not familiar with what total cryptocurrency market cap is, it's just all the money. It embodies the entire crypto market. It's Bitcoin plus all altcoins. And you can see we've roughly seen a correction of about 31%. And while we're in the midst of this correction, everybody's screaming bear market, bear market, bear market. Just like everybody was screaming bear market, bear market, bear market back in September when we corrected. Just like everybody was screaming about a bear market back in May, right? And at least on this channel and at Token Metrics, we were very, very adamant about this not being the end of the market cycle, and neither this being the end of the market cycle. While I do think that the end of the market cycle is more likely this time around, I still am maintaining bullishness, not only because I think that crypto can come back up and make new all-time highs, but if we just look at the overall trajectory of crypto over the years, right, this is an extremely fast-growing asset class. And even if we do go into a bear market and we come back down to this long-term trend line, we would expect, or it would be worth it, right? The risk to reward is still worth it in terms of how high we could go versus our maximum drawdown down to this trend line. So this trend line is on a logarithmic scale, and it's a linear trend line, which that just equates to exponential growth with occasional parabolic blow-off tops, right, that we've seen in the past. And we've seen these parabolic blow-off tops peak 1,449 days away from this trend line, meaning from these peaks, it would have taken respectively roughly 1,200 days for this trend line to catch back up to this valuation of roughly looks like $16 billion. And this valuation up here was about $824 or $832 billion, right? And it would have taken 1,449 days for this trend line to actually catch up. Now, at our most recent peak, we peaked at 616 days to fair value. That is very, very low in comparison to what we've seen in the past. And that would indicate that if this market cycle is anything like past market cycles, right, we have not hit the top yet. Now, it's entirely possible that history does not repeat itself and we actually do take a trip back down to the trend line, right? We actually had a bit of a small, like mini bull market bounce here where we did see a nice little parabolic move followed by a trip back down to the trend line, right? So we absolutely could be heading back down to this trend line, but right now, we're only 441 days to this trendline valuation, meaning the risk right now of buying crypto is actually fairly low in comparison to where we've seen it valued at in the past. Meaning if we just buy crypto right now or we hold on to our crypto right now, we would expect it to take roughly 441 days for this trend line to catch back up. So we could be caught bag holding for about 441 days, right? As long-term investors in the crypto market, that's not that bad. Now, the caveat is, the catch is that that's assuming they're in good projects that are going to bounce back. If you're in bad projects and the crypto market spills over, those bad projects probably aren't going to bounce back with the rest of the market. So that's why it's so important to invest in good projects that are not at risk of never coming back from a bear market. Now, looking at Bitcoin, right? We're going to look at Ethereum. We're going to look at a couple of really, really solid layer one projects. We're going to talk about buying potential dips on these or their potential support levels. So the first thing I want to talk about with Bitcoin is that we're roughly at a 30 29.96%, roughly a 30% correction from our all-time high of about $69,000. Now, we did wick all the way down to 42K, but as soon as we wicked down to 42K and popped back up, I said, we're going to consolidate more than likely at about $46,000. And that's exactly what has happened. We've popped back up, we tested 52K, and we've consolidated back down to $46,000. Why $46,000? Because that's the point at which you can no longer short Bitcoin on 3x leverage and hide your liquidation point against the all-time high. That's incredibly important because as Bitcoin's price drops below $46,000, the incentive to short Bitcoin on 3x leverage just completely dissipates. It dissipates. That means a lot of sell pressure, leveraged selling pressure, leaves the market. Not only that, but when Bitcoin's on a 33% discount, the spot buyers come in and they start accumulating again. And they buy their Bitcoin with a long-term hodling mentality. And they don't plan on taking profits on it until it's very, very high in price. So that, again, drops the supply of Bitcoin on exchanges and causes price to bounce, right? So right now we're seeing this nice little short-term bounce off of $46,000. We're all the way up at 48.2 right now, and we could absolutely see further consolidation and test 46K multiple times. A lot of times these key margin pressure levels, you'll see Bitcoin will test them multiple times. You can see this one up here at $59,000 was tested almost every day for several weeks, and it held. We went up and made a new all-time high, came back down to test it again, and it eventually broke and became some resistance, right? So we absolutely can bounce here, but we could also test it, and if we fall through, where we headed next. The big support level for Bitcoin is at $34,500. And I know that's scary because that's a lot lower than where we're currently at $48,000, but that is the 2x short level. And that is the point where you really want to be buying aggressively, right? At a 50% discount from the all-time high, you really want to be buying aggressively because, not financial advice, but you'll almost always have the opportunity to sell this as it retests its downtrend line, right? Just like we saw back here, right? With our previous downtrend line, with our previous margin pressure levels, our 2x short level was down here at 29K. You had some fantastic buying opportunities, 3 buying opportunities, and you could have resold the downtrend test. And had we not broken through, you would have been able to get out with a nice chunk of change, a nice trade before going into potentially a bear market. Nice 40% pop there, right? So that's what we want to be looking for if Bitcoin continues to drop and spill off. We want to be looking at 34,500 as major support. Now, interim support between 46 and 34, we've got several support levels, but the big one would be here at 44K and 42K. So we do have very strong support at 42 to 44K under here as well. So don't be surprised if Bitcoin just kind of consolidates in this region and just looks really ugly for a while before hopefully bouncing back up and breaking this trend line. That's exactly what I want to see out of Bitcoin. I want to see us break this trend line, make support on top of it, and head back to retest 58 to 60K. 58 to 60K will be strong resistance, and I would not be surprised one bit if we get some rejections there before hopefully coming back up and making some all-time highs, right? Now, ETH, what are the key levels for ETH? We've seen this expanding volatility pattern for ETH, right? And lately, the bears have been winning. The bears have been winning because we've been making lower highs. We were making higher highs, right? Now we're making and higher some flat lows, right? The same lows over and over and over again, double bottom, triple bottom. Then we wicked down and made a lower low. And that kind of spelled disaster. We've been making some lower lows now, which is, to be quite honest, pretty bearish. Now, where do we want to pick up Ethereum? We have a major support level at $3,400. That's where we would expect some extreme buying pressure to start coming in on leverage because the incentive to buy here on leverage just skyrockets. As soon as you can pick ETH up for under $3,400, you start to see this buy pressure come in, right? Not only that, we have multiple support levels below 3,400 at 3,250, 2,880, and again down here at 2,550, right? ETH is probably what I am most comfortable with right now. If you're just wondering, like, I don't know what to put my portfolio in. I don't know if I want it to be completely in stable coins because crypto is in a bull market, right? We keep seeing this go up and up and up and up. I don't know if I want to sacrifice all my exposure to the crypto market, because if we don't go into a bear market, I want exposure to the top, right? I feel like Ethereum is the perfect thing for anybody who might be nervous. Perfect crypto to be in for anybody who might be nervous and not know what they want to be in. Honestly, I feel much better in ETH than I do in Bitcoin right now. If we look at the ETH Bitcoin ratio, you can see that ETH Bitcoin has been doing extremely well. We're in the midst of a correction right now, and we were correct about our bearish ascending wedge here, and we were correct about our assumptions of ETH Bitcoin wanting to come back down after this breakout and test the top of it, right? Test the top of it before heading back up. That's exactly what ETH Bitcoin is trying to do. Ethereum is degrading against Bitcoin, and hopefully we'll see it bounce off of this 0.77 level up into another alt season. Now, I want to give you guys a couple of levels to look out for. I'm going to switch down to the 4-hour chart on some of these big plays, these big layer ones, right? So we've got Luna, we've got Near, we've got AVAX, we've got a metaverse play in here, Sandbox, and I'm going to give you one for Matic too. So Luna hit our margin pressure levels already. So if you tuned into the live stream yesterday, hopefully you saw margin pressure level at 52.27. Luna perfectly came back down to that 52.7 or $52.27 level. I'm going to switch to the 4-hour here. It's just much easier to operate a 4-hour chart. $52.27. Not only that, but it has broken the downtrend line. It's broken its downtrend line and is now making support on top of its trend. I want to show you this in a little bit more detail. So I'll zoom back in to the 1-hour chart here. This is what's called a bump and run, and this is a very, very bullish reversal pattern. It's a very bullish reversal pattern where you pop up above the downtrend line, make support on top of it, and go higher. That being said, Bitcoin is looking dicey right now. If Bitcoin does not continue to push upwards, it can wash out altcoins with it. Same thing with Ethereum. If Ethereum does not continue to push upwards right now, you can see it's up 2% right now, and Luna's up 11%. But if Ethereum and Bitcoin start to go down 4 or 5% in a day, it's going to be really difficult for Luna to sustain these gains. Now, regardless, Luna does look very, very bullish. It's up 11.27% in the same time frame where Ethereum and Bitcoin are up about 2 to 3%. So it wants to bounce back. It wants to go up. Just needs permission from Ethereum and Bitcoin to do so, right? Now let's look at Matic. Matic coming very, very close, and depending on how you draw this trend line, let me zoom out to the 4-hour here. Depending on how you draw this trend line, you could call it that it has essentially bounced off of this trend line. Now, could it go a little bit lower? Sure. But this trend line has acted as fantastic support. We had our margin pressure level entry point down here at $1.72. Let's zoom in and see exactly what it came down to. It looks like our low was $1.73.5. So we were 1.5 cents off. That's pretty darn accurate for our support level. And we're starting to see Matic push back upwards. Now, just because it's pushing back upwards at $1.89 doesn't mean we can't see another down day. Like I said, if you miss this entry point, if Bitcoin starts dropping, Ethereum starts dropping, expect Matic to come back down and consolidate towards $1.72, or even drop down to our next support level, which would be $1.29, which is our 2x short level, or 50% retracement off of our recent high at $2.58. Near protocol has looked extremely healthy lately. We had a nice bounce off of this support level at $6.64. This was a margin pressure level. We popped all the way back up to $11.89. And you can see, while it's messy here, we do have some margin pressure levels in this region, between $8.87, give or take, and $9.19. We have a lot of support in this region. These are margin pressure levels based off of our recent highs and our recent lows. This wick down right? This wick down came down to $6.14. If we take the 1.5x multiple of that, we see the support here at $8.83, right? So those are our levels. This $8 to $9 region for Near Protocol is a lot of support. Not only that, but we've seen Near Protocol, it wants to break out. It just had this huge move, right? All the way down here at $6.67, all the way up 79%. So Near Protocol, it wants to break out. It's in the middle of about a 25% correction, right? Could be a really good entry point to be getting in, right? On something that wants to break out upwards. Not only that, but it's also doing the same bump and run where it's making, this downtrend line, popped up above it, made support on top of it, and moved higher, right? Look for support down here on this downtrend line if we break further down. I want to give you levels for Sandbox, although I'm not sure if we'll come all the way down to $4.03 or $4.25. However, that doesn't mean we need to put our bids in any higher, right? We want to make them give us Sandbox tokens for $4, right? We don't want to overpay and jump the gun here at $4.76 and watch it fall down to $4.03 where we could have entered, right? So these margin pressure levels are based off of this high, right? And our previous low at $2, right? Right here, right? So we have a strong band of support between $4.03 and $4.25. You can see Sandbox already dropped into this band when it wicked, and it got bought right back up, right? Bought back right back up. 50% move to the upside immediately, followed by slowly bleeding down, right? So if we see Sandbox drop into $4.25 to $4 territory, that is a strong buy. All right, guys, that's it for today's episode of Crypto Foresights. I hope this helped you. If you enjoyed this content, make sure you hit the like button and subscribe to the Token Metrics YouTube channel. We are going for 1 million subscribers, and I know we can get there very soon if you guys all help out. Thanks for watching. We'll catch you next time.